Hi, this is Mike Swanson of Wall Street Window. I'm speaking with Jordan Roy Byrne, who runs the website, thedailygold.com. How you doing, Jordan?
Great, Mike. Thanks for having me on today.
Yeah, it's good to talk with you. It's actually been several months, and I'm not. It's been so long. I'm not exactly sure which month it was, but I believe it was either in July or August. And back then, gold and the mining stocks they got hit hard in July. The mining stocks really got crushed. They were down like 10% or something in the middle of July in one single day, and then they seemed to stabilize. And I do recall we did an interview sometime after that, and I was thinking at the time that that was probably the final bottom for these things. You did not believe that at the time, and now here we are. And last week, the mining stocks they broke those lows, or at least the GDX and the HUI and the XAU did. The not every mining stock did it, but most of them did, and so it seems like your opinion or that you had last summer was certainly vindicated. So I'm curious, what do you think now? Could we finally be at a low since they made another one last week?
Well, Mike, it looks like the miners today are putting in a little bit of a bullish hammer. So that's bullish, at least for the very short term, the next couple days. But if you look at just the recent price action in the miners, I mean, on Tuesday, which is yesterday, I mean, they broke down, they broke major support, and I wrote an article about this late last week. So the miners have basically broken support to new lows, and when you get a breakout or a breakdown, sometimes you snap back to that level which you broke and kind of retest that move. And so that's possible. What we could see today and tomorrow is the miners had this big breakdown yesterday, and perhaps they're going to retest that breakdown and then move lower. So I don't think the miners are there yet. Now let's talk about in terms of price and time. In terms of time, I think we're very close. You could see the miners in this bear market for precious metals end sometime in the next couple months. So we really need to be on alert for that. However, in terms of price, I still think there's a way to go, because if you could look at the, for example, just looking at GDX, it's hit a low, I think, of 1247 yesterday. It's trading at 1274 as we speak. There's a potential downside target around 10 or in the high 9s. So that doesn't mean that's going to happen or that I'm predicting that, but that's just saying if miners continue to go down, which I think is likely to happen in the days and weeks ahead, look at something around $10 as a possible downside target. And as we know, Mike, the miners can move really quickly. I mean, they can go down 10 to 15% within a week easily. So I would be very cautious about stepping in here and buying the miners right now. I still think they're going to trade lower. And if that comes to pass, I would look at maybe GDX around $10 as kind of a rough target, as perhaps when to step in. But on the other hand, you got to be careful with these ETFs, because they have some companies in them that are at risk of going bankrupt or down 95, 99%. So that's why you have to be a little bit, I shouldn't say a little bit, but cautious with the ETFs. But that's basically my view on the miners here in the short term.
What is the main reason you think they could trade lower if they do?
Well, I think there's two reasons. I think, well, perhaps three, but I think one of the reasons is, I mean, the miners have been extremely, extremely oversold. I mean, this has been the worst bear market they've ever been in terms of now price and time. And the fact that the miners haven't really been able to mount anything more than a rally for a couple months, it could be an indication. And we're seeing this in other commodities. I mean, but before the commodities turn, and we're going to see precious metals turn first. But I just think we haven't seen the bottom yet, and I think the dollar has more upside, and so it's somewhat likely that we could see bankruptcies in the mining sector, and so I think that's the real problem here, Mike. I mean, that's the problem before we get into the next upcycle. But also, if you look at the chart, just technical analysis, I mean, you look at the miners had this good base going, as you noted. They didn't make a new low for a while. They bottomed in the summer, so they had something like a 5 or 6 month base going. And now that they've broken below that, there is a potential measured downside target of around 10 or in the high nines for GDX. So those are two reasons right there. And then the third reason, which I kind of already noted, there could be more dollar strength ahead, and then also the metals. I still think gold is likely to bottom below 1,000 today. I forget what it's trading at. I think it's above 1,100, but I still think gold is likely to, like I said, bottom below 1,000. I mean, there's very strong support around 970, and it's true that the miners, with the way the miners have been trading in the last couple days to a week, they're definitely forecasting lower prices in the metals, and we haven't seen that yet, but I do believe the metals will come down more. And even though the miners have been leading the metals by quite a bit here, I still think, looking at gold, I mean, that's kind of far from 970, so I still see some room to fall in the sector. But again, Mike, let's go back to 2000 and 2008. I mean, we were talking about this offhand. The miners basically, I mean, they crashed in 2008, the weeks before the bottom, and the same thing happened in 2000, as you noted. So, I mean, like I said, you have to consider price and time. I mean, they could have a real ugly decline here in the next 4 to 6 weeks, but that could be the end of it. I mean, that could be the end of the bear market. I mean, that could really bring about the capitulation to finally get people out that have been holding for too long and all of that. So those are the reasons why, I mean, I continue to be bearish on the sector, at least in the very short term here over the next month or so.
Yeah, I mean, I'm looking as we're speaking at GDX, and it is green at this moment on my screen. And on one hand, we've seen many times over the past couple of years where the gold stocks went sideways for 6 months, then broke down and really fell terribly. The last time that happened was, as I said, in July. GDX had support at 17. That was the low in December, and then in March it retested, and then July it broke it, and it collapsed. It went all the way down to 13, basically. Now this time we broke. To look for some hope, I suppose. This time we broke it last week or yesterday, and we haven't really collapsed. So that could be a positive sign. However, I gotta say that I'm not really myself. I don't know about gold, and I'm not. I'm more really concerned about the stock market. Today, we do have some sort of reversal trying to be in the works, as it's 2:00 after what has been one of the worst declines, relentless declines I've ever seen for the U.S. stock market. As far as, it's been oversold for a long time without even bouncing. Even in 2008, it would have these 1 or 2 day bounces. We haven't even seen that happen yet. Hopefully, we'll get a bounce here. People really desperately need one to be able to get out, for goodness sakes, if they'll take advantage of it. But I'm really concerned that as soon we do get a bounce, that in a month later, we'll be declining again, and then we'll have a real decline and real panic. Because if it does bounce here, a lot of people will be relieved. They'll say, well, it's the bottom, it's holding the August lows. They'll get excited on television. They'll be calling and saying this has just been a correction. And then if we break down again, I think we could have a real nightmare drop. And I'm worried that if that were to happen, that could weaken the mining stocks for a little bit. That's, as we were speaking before we did the interview, that's essentially what happened in the year 2000. You had a support level for the markets, basically the March, April lows of 2000. The NASDAQ broke it in that fall and took the mining stocks down with them. And that turned out to be the final bottom for them, and they went up. Actually, they've never been lower ever since then. So that's a possible scenario I've got in my mind going forward.
Yeah, I'm glad you brought up the stock market, because something I want to note, if you look at gold against various equities. If you look at, I mean, today I'm looking at gold against the NYSE, which is a broad market index. I believe that has actually, well, at least intraday, it was trading at a 52-week high, a new 52-week high. That's gold against the New York Stock Exchange. And if you look at gold against the ETF ACWI, that's a kind of a global market ETF, a global equity. It follows global equities. And that, I think, while not at a 52-week high, I think that's at an 11-month high. So gold has held up really well during the sell-off, and gold is firming, and that's a very good sign. I mean, I wrote an article, I don't know if it was about 2 weeks ago, saying that these ratios, gold against U.S. stocks, gold against global stocks, they've put in a bottom. So now we're going to see gold outperform the stock market. And that's very healthy. I mean, that's a very good sign that a new bull market is going to be coming in precious metals. But in the short term, Mike, I mean, I think you and I agree that the stock market is getting oversold here and it's likely to bounce. I mean, it could bounce and then just kind of chop around for as much as a couple months and kind of suck more people in before that next big decline. And I think when we see the market bounce, you're going to see gold and also silver, which oddly has held up really well here in the last couple weeks. When the market bounces, you're probably going to see the metals go lower, since they've been holding up well during the sell-off in the market. Now, the miners, that's interesting because they've been following the stock market more so than the metals. And so I think you could see, when the stock market bounces, you could see the miners perhaps get a little bit of a bid like we're kind of seeing today. But overall, I would not be sucked in by any strength in the miners over the next week or so. I just see them moving a lot lower into a final bottom. So it's going to be very interesting to see how this plays out. But another thing I want to mention is gold against foreign currencies, which is something I watch quite often. And I was looking at the 2000 and 2008 lows, and I was looking at gold against the stock market and gold against foreign currencies. And those relationships can tell us quite a bit about potentially when gold might be making its bottom. So that's something I'm going to do a public article on that, maybe this week or next week. So, and today looking at gold against foreign currencies, that's higher. It looks better. Like I said earlier, gold against the stock market is basically nearing 52-week highs. So these things are very healthy. That's a very good sign for precious metals, but I don't think we're there at that final bottom yet. I think we could see that in the next couple of months, though.
Well, I think that might be a good place to wrap up this interview. I know you got to take off, and you're mentioning an article you're coming out with. Perhaps what I should do is ask you if people want to read this when you release it. Where should they go to get it?
They can go to my website at thedailygold.com. That's where I post all my work, and they can also sign up for my free service. There's a sign-up box there on the upper right side of my website, thedailygold.com. Or they can also go to thedailygold.com/book. I wrote a book about precious metals last year, and why gold moves the way it does, and what really are the driving fundamentals for gold, and just all of the research that I've done in the past couple of years is in this book, and I'm doing just a brief update on that, which should be out in the next week or so. So if you want that, you can sign up for my email list. And another way to do that is you can go to thedailygold.com/book and opt in there. And so everybody who's already on my list, they will be sent the update to the book. So those are the things that I'm working on right now, Mike.
Okay, great. Well, thanks for taking the time to talk to me and my listeners. And we'll definitely do more interviews this year.
Sounds great, Mike. Thanks so much for having me.
Thank you.